Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, Dalal Street is getting ready to welcome a new member into its fold. Syrma SGS will be listing today. It'll be probably the first stock listing that we are seeing in nearly 3 months, Santo, in the market from the IPO market. And I have a feeling, Santo, that this could revive the interest that has become dormant in the IPO space. I think
are you basing it on the grey market premium?
Yeah, I mean, look at the sort of premium that the company is looking at this point of time. Till last night, grey market is predicting almost 30% jump in the stock as in when it lists at 10 o'clock today. So clearly, there is going to be a lot of activity on this stock going ahead, and I think with this sort of a premium listing happening, Santo, I think this could just revive a lot of retail and HNI interest in the market. If you look at Syrma's IPO numbers as well, the retail quota and the HNI quota had seen a massive oversubscription going by recent standards. Of course, they were not as great probably as any IPO would be in 2021, but clearly given how 2022 has panned out for the IPO market, clearly it was a very, very strong issue. And going ahead, Santo, if you look at the pipeline, clearly a lot of IPOs after this recent rally since mid-June, a lot of companies are now accelerating their IPO processes to make sure that they can get listed over the next 4 months that are left in 2022. More than 40 companies at this juncture are sitting on IPO approval. So clearly all that they need to do is just hit the market with their paper. And apart from that, 10 companies themselves have filed IPO papers in just the June quarter alone. So clearly demand, it seems, or at least supply, it seems, is coming back because demand conditions are looking better.
And if you look at the big IPOs which hit the market this year, barring LIC, investors had a fairly mixed bag.
Yeah.
Some of them gave pretty decent returns. Investors made good money in IPOs like Campus,
Yes.
Adani Wilmar,
Yes.
Vedant has been good. Something like Ethos that started on a very muted
Ended
note.
up being a very good
it has
stock
also given
ultimately.
good returns.
Yeah.
So broadly, that's been the scenario, except if you leave out LIC, which saw the maximum interest from retail investors. It's been a fairly good year for IPO investors, by and large. That could be one of the reasons why you're seeing a good response for Syrma. But that said, particularly in this case, I would say the stock is definitely not cheap. Okay. Just there's about 50% growth in earning in top line over the last couple of years since
Just
FI.
50%?
No, compared to the multiples where the market is giving, which is about 100 times.
Yeah.
Okay, that is one. 50% versus 100 times. That's like a huge gap there. Secondly, the margins of the company, which was about operating profit margins, which were up, I think, around 17%. That has also come down to 10% in the last couple of years, right? So that said, I think this is a decent company from the look of it. At the same time, the market seems to be overpaying a little bit, but given the overall positive sentiment in the market at this point in time, mood is much better than what it was 3 months back.
Santo, the interesting bit with Syrma is that actually they have priced the issue much lower than what their pre-placement price was, valuation was. So in that sense, I think on a relative basis, probably investors are thinking that stock is cheaper. Also, let's not forget that this is another play that is entering the market on the consumer, contract manufacturing in the consumer electronics space. Now we know the one name that has been very famous in the space is Dixon Technologies, right? They have gained a lot of investor interest over the past 4 to 5 years because of their presence in the export of consumer electronics, and Syrma clearly is now part of that story again. And given the fact that this is a sector that is expected to do very, very well over the next 10 to 15 years, given the fact that India itself is pushing a lot of the companies to export consumer electronics, become contract manufacturers for many of the Western companies out there. So I think investors, what they are doing right now is just pricing in growth at probably just a bit too ahead. But I think given that sentiment, as you mentioned, is quite buoyant at this point of time, they are not so reluctant to do that.
Well, it has largely to do with sentiment at this point in time, CJ, and that's why I say that probably you could see the stock doing well over the next.
Yeah, but my broader point is that I think other companies will take cue from this, and they will also feel that if they just price their issue just reasonably enough, I think then they can probably be able to get the IPO through. I mean, a lot of startups are still waiting, in the lineup. You have companies like GoDigit, which is coming out with this IPO probably later this year. MobiKwik, Snapdeal, a lot of these companies are waiting in the queue, trying to get into the public markets, and hopefully with a listing like this, I think it might ignite some bit of optimism there.
Definitely, I think that, but also let's not forget, the IPO pipeline necessarily does not mean that these markets,
Yeah.
these companies will hit
Absolutely,
the market
absolutely.
if sentiment suddenly takes a
Absolutely.
change.
Well, that's
for
it,
the
Santo.
worse.
Let's quickly now move on to what is the trade setup for today. And it is a pretty good Friday for Dalal Street. If you look at the SGS Nifty, it's indicating almost a 70 to 80 point up move on the Nifty benchmark when the market opens. I think what bulls would probably take heart from, of course, is the FPI buying that happened yesterday, Santo, in the cash market. FPIs were again net buyers, and I think that will probably force a lot of the bears out there yesterday who took short positions or rolled over short positions into the September futures to probably start covering their position. So I'm expecting some build-up of long positions today in the market, Santo, just on the back of that FPI number that came in. And apart from that, if you look at the handover from Wall Street, that was also quite strong. Benchmark indices in the US rose quite sharply ahead of the Jackson Hole summit. Clearly, probably on some, one of the Fed members who was traditionally a big hawk on inflation actually sounded a little dovish, and I think the market just read those incrementally positive things out of that commentary.
Well, looking at the way the market sold off late in the evening, late in the afternoon yesterday, it does seem to indicate that maybe that FI purchases which we saw probably could have been hedging positions. They must have reversed their positions in the FNO market, being expiry, and then
because they were actually adding short positions in the past 3-4 days, so probably it is possible that it was just a reversal.
Exactly. That said, at this point, though FIs have been buying, they continue to be largely active on the buy side for the last week or so. Now we are suddenly seeing that domestic institutions have started booking profit, and probably that is what is keeping market in a range. That said, the mood for mid and small cap stocks at this point still seems to be fairly positive. If you speak to people on the street, at least the HNIs, they've made some decent returns over the last month or so, and they would still want to probably ride their bets which are doing well at this point.
That is true. I think so. Clearly, overall, I think at least so far we can probably end this week on a happy note. Hopefully, by the time it's 3:30. That said, let's now look at some of the stocks that will probably be buzzing in trade today. Starting off with Santo.
Well, Eicher Motors is the first stock on a watch list this morning. Now, the stock has had a good run up over the last couple of months, and good news for investors who had been hanging on to the stock for many years now. In fact, the stock had been underperforming since almost 2017-18.
Yeah, 2018 is when the slowdown started happening with the auto sector.
Exactly.
I think, since then.
But now, after this run up, there's a feeling that probably the best may be over, and at least for the time being, you could see the stock taking a breather. According to UBS, it's come out with a downgrade rating on the stock. UBS is of the view that the valuations are looking quite rich at this point in time, and it's also raised the point that even its own UBS own estimate of domestic sales for Eicher Motors in FY24, that's about close to 7.9 lakh units.
Okay.
But that will still be lower than the peak of close to about 8.1 lakh units, 8.05 lakh units, which the company had sold in FY19. So, if you look at lower numbers here and the fact that stock is quoting at a much higher price than what it was 3 years back, then probably there could be need for some breather in the stock at this point in time. Besides, Elara has said that the export market, which is where Eicher is trying to be a big player now, could also face some headwinds given that the overall global macro environment is a little iffy at this point in time. This is not to mention the fact that Eicher Motors practice of steadily hiking price also could probably make it the product a little unaffordable at this point in time.
I think, Santo, if you look at the Indian economy, I'll just speak about the Indian economy first, given that that is the biggest market for them. I think if you look at the Indian economy, the high-end consumers clearly have left COVID behind. I mean, for them, COVID is no longer an issue as far as livelihood is concerned, as far as demand is concerned, and therefore I feel that the risk to demand going ahead is very, very low for Eicher, given that it caters largely to that high-end consumer base. Apart from that, of course, the past 2-3 years, one of the bigger challenges for Eicher is that there was no new upgrades or new models coming into the market. Now, clearly, the company has said that over the next 18 to 24 months, they will be launching a lot of upgrades, a lot of new models. The Hunter, bike that has the edition that they have launched is clearly a step towards that, and I think that should help.
Just a point here, CJ. The previous 2 launches have not gone that well. So
so maybe so far,
not necessarily that launches should continue to do well.
But you only need 2 successes out of 5 or 6 to probably make up to the volume numbers that you're talking about. Not every model that you will launch will be successful, but all that you need is 1 or 2 blockbusters, and I think that is enough. And probably given Eicher's or Royal Enfield's track record, I think you could bet on the company to do that in the next 2 years. The major point, of course, here is, and this is something that CLSA also made, is that a lot of older, RE owners or Royal Enfield owners are now looking to probably upgrade their models. Probably they want to have a new Royal Enfield bike. Earlier, they did not have options in the market, but probably going ahead with the new models coming in, they will have that option. I think Eicher could capture that demand. And overall, I think Eicher is a premiumization story, right? It has been rallying since 2008 on that story. I mean, back in early part of last decade when Motilal started their coverage on the stock, and probably they were one of the earliest. They had this theory that premiumization in the two-wheeler segment is what is going to drive growth for Eicher, and that is a long-term story that I think is still in its probably in its mid-cycle, if not its infancy.
Well, just one interesting point here, call it what, Eicher Motors, Royal Enfield, Hunter, Classic. The man on the street still refers to it as the Bullet.
Yeah, absolutely, and that is the pull. That is always the pull. I mean, even today, a Bullet goes by or a Royal Enfield goes by and any other bike goes by, you will probably always look at the Royal Enfield, and that is the brand pull that the company has. Well, next stock on my radar is Delhivery. Very interesting report coming out from Jefferies today. Now, let's not forget that the stock has fallen about 13% since its Q1 results that came out earlier this month. The earnings were quite disappointing because of the fact that the company has seen widening of losses on a quarterly basis, as well as integration challenges with respect to their new acquisition. But on that backdrop, Jefferies has come out and initiated coverage on the stock with a buy rating, and they have a very, I think, price target of over 775 if I'm not wrong on the stock. Now, what their call is that they are expecting the Delhivery to benefit from the larger growth trend that we are seeing in the logistics sector in the country, and they're expecting the company to turn profitable in FY25 and FY26. Now, if this plays out, of course, Jefferies expects almost a 20 to 30% upside over the next 12 months in the stock. I think overall, Santo, if you look at it, B2C, of course, has been very good for Delhivery, but the spot-on acquisition that the company did last year is now making it even a bigger player in the B2B segment. And I think that is what Jefferies is pointing towards, that an additional growth lever has come in for the company. I think that is something that could benefit the company going ahead. And overall, the valuations now after that correction earlier this month, I think seems to be a little palatable for investors out there than probably it was before the earnings.
Well, after the Q1 numbers, CJ, sentiment for the stock has clearly been a little subdued. Till then, people were quite upbeat and the stock had performed, but after the widening of losses, again, I think investors are getting a little doubtful. A couple of things here. So, as you also mentioned it, but according to IFL, the two immediate near-term challenges for Delhivery at this point is the integration of Spot-on, and besides that, the loss of the Shopee account also was a major blow. So, these couple of factors are likely to weigh on the near-term performance, that is at least for FY23, and which is what you are seeing in the stock price at this point in time also, that the stock is not really performing, which means that investors are a bit guarded in their approach.
I think, sorry, Santo, just to interject on Spot-on, I think the view from the management is that they are almost through with the integration. They do not expect more challenges. They had faced challenges with respect to the integration in the June quarter, and I think that contributed to the cost pressures that they're facing. Even Jefferies has said in their report that they do not expect the integration to take more than 6 to 9 months going ahead. And once that is done, probably Spot-on, given its operations in the B2B segment with respect to the logistics sector, clearly that could very quickly start adding to the revenues of the company.
But my view is also on logistics as a long-term play. At this point in time also, if you just look at sheer valuations, you have Delhivery on one side and the entire listed logistics firms on the other side, where the margins have not been all that high. They've been steady, consistent. These companies have been making money, but there's nothing like you would want to pay absurd valuations for. Well, with that, the market has opened, and as expected, it's a firm start. The Nifty, the Sensex is up 275
100-point jump in the Nifty, which is very impressive
The two key levels that traders are looking at this point in time is 17,430 and 17,340. That's what.
Yeah, on the support side, I think Santo, the most crucial level in this market right now is 17,780. That is one number that is on everybody's lips, because that is actually the top of the downward trend line that we have been seeing since October 2021. If we break out, then a lot of people out there are not expecting a more than 2,000 to 3,000 point rally in a very, very short space. But if we do not break that down and we do fall below the support that you mentioned, I think 14,400 will then be back in play.
Well, good market breadth also. 1,700 stocks up on the NSE and less than 200 stocks.
I mean, look at this VIX, Santo. Very surprising. The India VIX index is higher by 6% at this point of time, which is very surprising in a gaining market. It seems like people are also adding shorts at the same time, while the cash market is, giving such good.
Lack
good
of conviction, typically, it's a
possibly,
contra indicator, but that seems to work
also,
well.
it is possible, given the fact that you have a very eventful weekend. So possibly, some people are trying to already take position and place their bets on how the market will open on Monday morning.
Well, yeah. And last stock on our watch list this morning is Larsen & Toubro. Stock up by close to about 26% over the last couple of months. So this clearly seems to indicate that more and more people in the market seem to be now believing in the capex revival story, which is what Larsen & Toubro is largely about. If you're making a play on, you're taking a bet on capex revival, then no better stock than Larsen & Toubro. Also, the company's guidance for FY23 has been pretty strong, and given its execution record, market is again convinced that it should be able to deliver on that. Lastly, losses in its Hyderabad metro arm, that has been narrowing. The traffic there has picked up. So these are some of the positives at this point, which is leading market to take a bullish view on Larsen & Toubro.
Well, Santo, just to put it out of the way, I don't think L&T's growth targets or guidance for FY23 is as impressive as the chatter that has been around the capex cycle recovery in this market. I mean, if you look at every analyst, every fund manager you talk about, all they talk about is the capex story, and even then L&T is only guiding for about 12 to 15% growth, which is also similar to what they had in FY20.
Look at the base.
That doesn't matter. It was similar to what it was in FY22. So I don't think there is improvement. If you're really that gung-ho, you would probably want to go more than 20%, given the sort of rally the stock has seen. Now, my concern with L&T right now is that L&T, probably much like ICICI Bank, has just become too overcrowded. It's become a very, very overcrowded trade at this point of time, especially given the fact that in the capex space, you don't really find too much quality out there. You have to take, you have to stick your head out and probably take a bet in that sector. And L&T, given its name, given its legacy, of course, attracts a lot of premium valuation. If you look at some of the analysts, almost 98% analysts have a buy call on the stock. So clearly, there is just a lot of optimism in the stock at this point of time. And I think for all that optimism, it currently is only offering about 10% more upside to the consensus price target. So I think, Santo, clearly, if you look at, look beyond the top 50 companies, there are a lot of opportunities in this market to make more than 10% than to put your money in an L&T, where you're only going to probably just about beat the market.
Well, with that, it's a wrap on this edition of Market with Santo and CJ. Thank you for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading day.